Hi, Paul.
Good evening, everyone. The time is 7:45. We'll go live at exactly 8 o'clock. But for everyone watching us this evening, a big welcome. Lovely to have you all join us this evening. And I see we're already joined by Jonathan Hertz. John, turn on your camera. Paul, turn on your camera. Jonathan, you look like you're sitting in a butchery. Where on earth are you? No, we need to unmute you. And Paul, unmute yourself.
Yes, I'm here. Hello.
I'm actually sitting in an office. I know an office is a foreign place for someone like you, Howard, but you know, some of us want to support the beleaguered REIT industry, Paul. So we come to the office now and then just to try and help out with, you know, our friends who are property owners.
So are you still paying rent, Jonathan?
Yes, I am still paying rent. I'm one of 3 people on earth who pay rent and my e-toll.
You pay your e-tolls?
I do.
Paul Theron, I cannot believe that you would ever pay e-tolls.
You know, I pay them when they get sent to me by mail, Howard. So I'm also in that category of people who like to keep my nose clean. And I'm actually also at the office, disappointingly, and that's because in Upper Houghton, where I live opposite King Edward, the entire grid is down. So we're in a load shedding situation. So what are we going to make for that?
I'm on the same grid as John, so we're expecting to go dark in about 12 minutes, but nothing happened yesterday. But I want to know from an investment perspective, when we go through periods of load shedding, do both of your clients come to you and say, this is the time to take money offshore? We've had enough. Is the issue of electricity one of those trigger points for South Africans that make them want to move their cash out of the country?
I'm not sure that I've seen that. I mean, it's more the level of the rand, to be honest. People don't like taking it out when it's been weak for a couple of weeks. I don't know. What do you think, Jonathan?
No, that is true. And there's no doubt that we feel depressed when our sports teams lose, etc. And when electricity is poor and we're in a load shedding environment, but the market doesn't behave like that. And I mean, this negative view on South Africa, would you believe that the South African market in dollars, measured in dollars over 5 years, I think April to April or April to March, has kept pace with global markets, interestingly. So we all have this view. We all have this interesting view that everything is terrible here, but we've certainly had a better run in the last quarter versus global markets. So who knows?
And we joined as well by Dave Shapiro. It looks like you joining us from an art gallery, Dave.
I am.
Tell us about those pieces behind you.
That one?
Yes.
Yeah, that one I've seen before.
Yeah, that's Neville Lewis. That's the Blind Malay. My dad bought it from, funny enough, that's from our own family. I've got cousins down in Cape Town. Her name was Sissy Jaffe, and she was a friend of Irma Stern and Maud Sumner and all of those Bunzaya during the heyday. She's actually Shapiro. You know, he's a cousin of mine, Jonathan Shapiro. He's actually a distant cousin. So his grandfather and my father were like first cousins, and this was his grandfather's sister, so my father's first cousin, and my dad loved it. But when Sissy died, the family auctioned this, and my dad loved it and bought it on the auction. But my mother hated it. So I think the day that my dad died, she said, "Here, take it."
So, Dave, you talk about Jonathan Shapiro being a cousin of yours, but you are in fact a cartoonist yourself.
Yeah. Yeah, I was a better known cartoonist than he was back in the 80s and 90s. I had exhibition at Goodman Gallery, at Edward Reed of my cartoons. Yeah, but you can't do it today. I still draw. I mean, I've got a lot of drawings in it, but it takes a lot of time. You know, it's a massive, and the markets just sap all your energy. You know, when you look after other people's money, you can't do it on a half kind of baked basis. It's full time. So I still draw a lot, and I've still got. I'm working on some stuff now, but I mean, yeah, I enjoy drawing. But I published all over. I was in all magazines and I did a cover for Financial Mail for Finance Week. They had a cartoonist by the name of David Gaskell. He was the cartoonist of note, and he was a drunkard of note, and he always used to bash the car or come home drunk or things like that. And I would they would say, "Oh, we're in urgent. Please do this cartoon. Gaskell's drunk. Can you just do this for tomorrow or something like that?"
So, Benji Porter, it would appear that looking after other people's money is very stressful, which may explain maybe Paul's lack of hair, maybe some of Dave's very short hair, but Jonathan still has a full head of hair.
It's very grey, very grey.
But I think this is an interesting point. Does looking after other people's money create a very stressful environment for all of our fund managers? Paul?
No, I'd say not. I must say I don't find it too difficult. But I have a fairly high sort of pain tolerance myself. So I try to exude calm at all times, make sure that people don't get too hyped up. Obviously, if you've got a big client base, there's always somebody who bought at a recent high, and that can be a little embarrassing. But, as long as you represent your services well, it shouldn't be too disastrous.
So, Dave Shapiro, I'm going to ask you to log off and log back on because we're getting a bit of an echo of your system. So I've actually put you on mute. But if you don't mind just logging off and logging back on, we're just going to try get rid of your echo just before we begin. And Heidi Brower, welcome.
Hello, nice to see you.
Wonderful to see you. I miss the days when I actually saw you in person.
Those were them.
So, Heidi, people would know you probably most famously for being the genius behind the Kalula marketing brand. That's a few years ago. When you've seen airlines take off again over the last month or two, does something within you stir and say, "Oh, I wish I could be part of the launch of a new airline brand"? Or do you say, "Thank goodness that's no longer my responsibility"?
Well, there's a part of me that wishes I could. And then when I got a phone call from a very nice older gentleman the other day telling me that he'd lost his luggage, then I was okay again. I don't miss it that much anymore.
But it must have been a big jump to go from creating really vibrant brands into the financial services sector. It's a little more staid when it comes to marketing, because you, of course, are now the brains behind Hollard.
Well, I think that I said to our chairman, actually, when I joined Hollard about 8 years ago, I said, I didn't have a deep yearning to be in financial services, but there's something about this brand and the family and the shareholders that the ethos appeals to me, and the vibe and just the essence of it appeals to me. And some people think that I brought the funny and the quirk to Hollard, but I didn't. It was there already. And so it was an attraction, and I haven't ended up in a staid financial services space. And so it's a good fit.
Benji, I have no doubt that you've run a Hollard race in a purple Speedo, and I see that Heidi is actually wearing purple. Have you ever done one of the Hollard fund runs?
That's Paul Theron's domain. He takes those Hollard. Now, I've done a few of the Hollard runs, but nothing like Paul.
Actually, I've done none. I would never appear in a purple Speedo on a Friday afternoon.
Oh, Paul, you say that on live forums. I know you
even know that it happens on a Friday afternoon, which tells me something.
Exactly. Exactly.
Dave, just before we come to test runs audio, let's talk to us and let's make sure that, in fact, we're not getting an echo from you.
If you're not getting it, I'll put headphones on.
No, that is absolutely perfect. Much better now. Thank you. So, Ran Noina, you dressed in your appropriate Bitcoin clothing for tonight.
I only have one shirt. So I have the same shirt. I have 15 of them. Every day I wear the same shirt.
And and do they come in various colors or not so much?
No. This is it. This is the same shirt every day.
So, Ron, you used to being in front of the camera. You're usually on the other side doing the interviewing. Tell us about your current show.
So we are building a media station. We're building a 24/7, 365 crypto global media streaming station. We've got, it's called Crypto Banter. We've currently got 4 live shows a day. We're building. We've been going for 3 months and we're building it.
And you're building it from Cape Town at the moment because you've hopped around the world a little bit.
Yeah, so we can't get back to Miami. We tried. They don't want South Africans. They're not interested. So unless we can quarantine somewhere for 2 weeks before we go to the States, no one's accepting us. So we're here.
Okay, well, it's a fairly good place to, in fact, do that. In fact, Benji, we have some media stars on because, Dave, how long have you been on the radio for?
Me?
Yes.
I started with Alec Hogg when business radio was just beginning with SAfm. That must have been 97, 95, 96. So that's like 24 years, yeah. And then what happened, I started with Alec, and Alec employed Bruce, and he employed others as well, and they gradually branched out. So what happened is, as they branched out, so you started to, can you come on my show, Bruce, and 7, yeah, okay. And that's what's happened, So now we're media whores, we're all over the bloody place.
Well, Paul, you've taken to YouTube quite successfully, and you do your business Blunders. And what sort of audience are you getting on those sorts of media?
That started out as a newspaper column once a week in Peter Bruce's Weekender. And then I shifted it to Bruce Whitfield's 702 show. Then I got fired for swearing on air. I'm not even going to tell you which word I used. So then I thought, well, I'm going to take this thing to YouTube because there you can say what you like. And that's been going well. Obviously, also YouTube is interesting because it appeals to a different, perhaps younger audience, and the material is always there. So you don't have to just depend on those people that catch you at that moment. Look, I'm by no means South Africa's most visible YouTuber. There are people that have millions and millions of views, but I like that medium. It's fun. And, you can experiment with it. I've ended up doing these kind of 5-minute polemics, which is an interesting kind of art form. Sometimes people say you seem so calm in real life, but when you're on those things, you look as though your blood pressure just went through the roof.
So what gets you most angry about at the moment?
Look, that particular character, I don't know if you've ever seen a guy called Jonathan Pye, who talks about, issues of the day and rants about Boris Johnson being useless and so on. So I tried that out, using mostly, issues of the day in South Africa. The problem with that is that appeals to quite a hardcore conservative audience. So I'm finding myself just a little bit trapped in that right now. So I'm ready for a bit of a pivot in that regard,
Okay, so let's actually poll, because Benji, your daughter spent the day delivering food to Wit students who had been arrested, who were in police cells. It felt a little like the 1980s when we used to do the exact same thing to students who were detained by the police then. But tell us a little about what your daughter did today.
No, so the story starts a little bit further back where I think that this issue around student fees and the whole fees must fall is a bit trivialized, especially by this kind of audience, where there's like really a deep issue that there are a number of students who some of them second years, who just simply can't afford to pay the university fees. And so through her involvement in student politics, a couple of the kids have got involved, and they're trying to highlight the issues. And I think that, we're very quick to say that people have stolen the future when there's like a little bit of carbon emission or something like that. But when you talk about 8,100 students who can't start second year or can't start third year for 21 million rand, and you contextualize that with what's been stolen in the country, you really are talking about some issues that are quite huge. And there are elements within the student politics that are opportunistic. but the issue got deep. And so a few of them were arrested. So my daughter, along with a few of her friends, Gabi Farber has been like a leader in this. And a few of her friends went to go take food to the people, the kids in prison or the students in prison. They're busy they're seated in Empire Street at the moment, and they really want this issue known and not trivialized. And I take my hat off to her. I think that this is a continuation of the struggle that someone like you started, Howie, where, you know, actually our future does depend on our students being able to be educated. And if we trivialize it and see them all as a homogenous group of perers, I don't think it's helpful, because it's actually not true. She told me one story, actually. She told me many stories that dominates our time, but she told me one story. There was a kid who lost their mother last year. So she texted my daughter, who she knows like very involved, and she said, can she get the notes? So my daughter sent the notes and WhatsApped the notes to this friend of hers. And 4 days later, the kid could download the notes. 4 days later. So my daughter phoned her and said, what's going on here? You know, obviously in a very nice way. Her mother had just passed away. She said, no, I didn't have data or airtime. You know, I had airtime to be able to, and then I didn't have enough data. And I think that those things should not be overlooked by South Africans. We're desperate to have a future, and the varsity kids, obviously not opportunistic ones, are one of the starting points.
So just very quickly before we begin, thumbs up or down, Johnny Hertz, should university be free in South Africa? Yes or no? Up or down?
Yes.
Paul
I don't even
Theron?
know if they argue it should be free. What actually part of the argument, Howie, is that there should be more thought placed into how the fees work. Someone comes from King David paying
so mean tested free.
Yes, exactly.
That's what he's really asking. He's asking whether on a means tested basis it should be free.
Exactly.
Paul Theron, your thoughts very quickly before we begin?
Yeah, I suppose the means tested thing is the real key. But I don't think universities should be free for rich people, because the individual benefits that accrue to tertiary education are enormous in terms of later earnings.
Dave Shapiro, you have kids in Australia. I understand that in Australia, it is in fact always done as a loan. But if you go into a low-paying job, for example, a teacher, a nurse, you never meet the minimum threshold to start paying back the loan.
Yeah. Great system. And it should be like that. I think the one thing that South Africa is that we've got an entitlement culture here, where everybody wants everything for free, including airtime. And I think we've got to, you've got to inculcate a culture of listen, you've got to actually pay for it. And, that's where the stealing comes from. So, Benji, Howard knows my parents-in-law, my late parents-in-law. They were betuchas, of the real ones, flag-waving commies. And
the Basel family are renowned activists in South Africa and bring much pride to our community.
Yeah, so I'm saying, but they never believed in the kind of empowerment that we have today. They never believed. They believed that you should teach people to survive and to, stuff. It wasn't a free economy. You just take what you want.
So with that, the time has just gone 3 minutes past 8. I'm going to ask all of our panelists, other than Benji, to turn off their cameras. We'll come to you in a second. And we want to welcome everyone this evening watching on YouTube, watching on Zoom, watching on Facebook, on 2 channels on Facebook as well. A huge welcome to all of you all over the world. I see we have some of our very regulars who are watching us this evening. And I believe Aubrey and Etienne had their injections, their vaccinations in Toronto. Wonderful to see those pictures, but amazing to see such a fantastic audience all over the world. Please let us know in the chat where exactly you're busy watching us from. We'd love to actually get a sense and an understanding where people are watching. Benji, we started conceptualizing tonight's show probably about a month ago over something called Gamestop. How did that all happen?
Look, again, I think a lot of the conversation around like a Shabbos table with people that you and I interact with and much younger. All of a sudden, people are talking about GameStop and something called Robin Hood, which wasn't a character, a mythical character, and things like Reddit and deep something value, which someone will put in. And I think we were just interested, so we started investigating it. And the more we investigated it, the more interesting it became. And I think from there, we're going to hear from really interesting people around whether it is David versus Goliath, and whether the financial world's finally becoming democratized.
So I think this democratization through social media, through access and apps to the stock market is a fascinating area that we're so excited to talk about tonight. But of course, as always, we want to make sure that you've seen the latest edition of the South African Jewish Report. Justice Mogoeng is on the front cover this week. And it's in fact the 1 year anniversary since we all went into lockdown. Benji, I don't know when you went into lockdown. Tomorrow will be exactly 1 year for me since lockdown began.
Me too. Me too.
So,
the kids, yeah.
So if you haven't got your copy of the Jewish Report, please go to your local Checkers, Spar, Pick and Pay, hypermarket, garage shop, exclusive books, CNA. Pick up your latest edition of the South African Jewish Report newspaper, a remarkable read. And don't forget as well that we've redone our entire website. It's now incredibly mobile friendly. Go to www.sajr.co.za and either download the entire edition or look at each of the individual articles on it. It's really the most fantastic read. We've got some amazing webinars coming up over the next few days. So we've got a very busy time, Benji. Tonight, we're talking about the democratization of investing and the stock exchange. Saturday night, we're in fact talking about the Israeli elections. We got talking heads. We're joined by Paula Sleer, as many people will know, used to be on SABC in South Africa and is now the Russian television Middle East correspondent based in Israel. Paula will be joining us as a commentator, as will Arthur Lank, the former Israeli ambassador to South Africa. And we're going to be talking to a number of political parties in Israel on the eve of the Israeli elections. Is Israel too democratic? They've been to the polls multiple times in the last year. They can't form a stable government. In fact, since Israel was created in 1948, there has never been a majority government in the country's history. But we're going to be talking about those existential crises. We're going to be talking about Iran and Syria and relations between Israel and South Africa. We're going to be talking about vaccines because Israel leads the world in the vaccination program, but probably had a disastrous COVID experience. We're going to be talking about all of those issues on Saturday night in Talking Heads. So please join us 8 o'clock on Saturday evening on the eve of Israel's elections. We're going to speak to those people who really count in that part of the world. And then on Sunday evening, we have the most remarkable story. And it's a story of heroism. It's a story of bravery, and it's a story of vision. Because exactly 100 years ago, this coming Sunday, it marks the rescue of what are known as the Achberg orphans. How Isaac Achberg, the wealthiest Jew in South Africa at the time, led a mission into Eastern Europe in 1921 and brought back 200 orphans who otherwise would have perished in the pogroms that were taking place in Eastern Europe at the time. One man saved what today is 4,000 descendants of the close to 200 Achberg orphans. And we're going to be marking the 100th anniversary of the rescue mission by telling the story about what was happening in Eastern Europe at the time, by speaking to Achberg's descendants, his nieces, his grandchildren, about the man and the heroism that it took to do this. We're going to be describing the mission in detail as it took place bit by bit on how he gathered orphans from throughout Russia and Eastern Europe to bring them to South Africa and what happened to them in South Africa. We're going to be speaking to the descendants of those orphans who are going to be telling us the story of their family, and we're going to be having a ceremony to actually mark 100 years of that remarkable event. So that is in fact our next two webinars coming up over the next few days. A reminder to everyone that if you want to ask any questions this evening, at the bottom of your screen there's a chat button. You can chat amongst yourselves. Please feel free to comment as we go along, but if you have any questions for members of our panels, please look at the Q&A button at the bottom of your screen and post any questions that you have there. Both Benji and myself will be, in fact, looking through that all the time. If you're watching on Facebook or if you're watching on YouTube, use the comment section there as well. We're going to try to pick up all the questions that we can through that section. So on controls tonight, Danny Kadar, if you could turn on your screen and just wave at all of us. Hi, Danny. And thank you for all of that. And Hayley Brower, if we can ask you to turn on your camera. Welcome. So wonderful to see you.
Thank you. It's lovely to be here.
We were talking to you a little earlier. You've been at Hollard now for 8 years. You're wearing that Hollard purple, and you've got the most remarkable, amazing initiative that you're going to tell us about tonight.
Yes, I am. You know, you were talking about the orphans, and obviously that's close to our hearts as we sit at Arcadia House in Parktown. But I have to tell you a story of love and a labor of love in a very short time, and so I'm just going to get to it. We were sitting with our ad agency VMLY&R a few months ago, and we were saying it's time for our next communication campaign, and what do we do? The context that we're in is so unusual, unnatural. We need to respond to the fact that business is suffering in the country. We also have a responsibility to our own business and our own stakeholders, employees, and so on, to keep our business going. How do we do this? And central to everything we do at Hollard is our purpose, and our purpose is to enable more people to create and secure a better future. And the essence of Hollard is to be catalysts for change. And written into our purpose is a thing that says, because we believe that there's always a better way. And Ryan from our ad agency, a very clever creative brain, came up and said, if there's a better way to do everything, what if there's a better way to do an ad campaign? And a better way to do an ad campaign in this context that we're in, where business is suffering so much in this environment, what if we gave our ad space to small businesses in South Africa who are struggling so much in this economy? So we had to toss that around a little bit and say, how do you give your ad space away when you've got a responsibility to your own brand and your own business? Because that's true. But we found a way. And the way is the campaign that you may have seen all over the interwebs and on billboards and so on. It's called Big Ads for Small Business. And what we did was we asked Hollardites, people that work at Hollard, to come up with an idea of some of the small businesses that have impacted them, that they know could use a boost. We had 292 entries. We put them through a process because we wanted to make sure that if we were going to support them with big advertising, that they wouldn't topple over, because that also wouldn't be responsible. And we narrowed it down over a series of rounds to 12 small businesses that are receiving probably close to about R1 million worth of media space from each of us. Bruce Whitfield said to me on the radio the other night, I'm sure you don't need that media space, who as advertising in this economy. But actually, not only are we giving them 80% of our media space, we've bought more. So we've got these 12 small businesses, local, national. There's, you'll see them now in the little clip we'll play for you. Connie Wines, a coffee business, a tailoring business, an education business. 12 beautiful, beautiful businesses that represent the gloriousness of South African small and medium enterprise. And we'll support them for 6 months with communication and advertising. And we got on the phone the other day with Danny, and we got talking, and we said, what if we could replicate this in a small way through the Jewish Report? And that's what we're going to be doing over the next 6 months with you guys. And we'll share a little bit more about it in a minute. But really, we're giving 80 adverts to businesses that couldn't ordinarily themselves afford to place an advert in the Jewish Report, both digital and in print, for the next 6 months, over the next 6 months, for a week. And we'll show you just now how you can apply or submit somebody that you know. There are now 412 people listening to this. And not only do I know that we'll fill those 80 adverts very quickly, but what I'm really inviting you to do is copy this. We would be more thrilled than you could ever imagine if other brands, big brands, small brands, do the same thing. because that's all we want to be, is catalysts for positive and enduring change. So thank you for the opportunity to give this gift of catalyzing small business in South Africa. You can watch the little clip and there'll be a link shortly afterwards that you can click.
Eddie, we'll talk to you in a minute just after we watch the video.
You walk past them every day. You pop in with Tole coffee. You pop out with fresh laundry. It's where you get Eza pies that just aren't the same anywhere else. Yes, we're talking about small businesses. They've had a rough time lately, so we're doing something about it. With big ads for small business, we're sharing our ad space with some of the small businesses of SA to help them get back on their feet. Sibasize bavuke nabo. Because helping them creates better businesses, better communities, a better South Africa, and better futures.
Absolutely amazing. So, Hedy, tell us, how do we apply?
Well, so there's going to be a link posted in the chat. There's a link posted in the chat currently. There's a link posted on Facebook. There's a link posted on YouTube. The numbers you were talking about are just our Zoom numbers. But if you're on Zoom, YouTube, Facebook, you're seeing the link in your chat section now. Just copy it out, stick it on a clipboard or post it into a Word document. But that's the link you click on. You apply to get free advertising courtesy of Hollard in the Jewish Report newspaper. Absolutely right, 100%. And we are so excited to be able to catalyze something beautiful like this. And as I said, just do the same. If you're a business owner and you can afford to share some of your ad space, let's do it. We talk about public-private partnerships all the time. Let's talk about big business, small business partnerships too.
I see someone just posted, is this for Johannesburg only? And of course, the answer is absolutely not, because the Jewish Report is published throughout South Africa. We're read in hard copy by about 36,000 people every week, and in digital copy by about another 25,000 people. Our newsletter gets out to close to 30,000 people as well. Our WhatsApp groups are 6,500 people. So our webinars, we've now reached close to 1 million people in our webinars as well. So the answer is absolutely not. If you've got a small business, take advantage of this opportunity. Both Hollard and ourselves would love to help. And Hedy, I want to thank you as well, because you came on board. You were one of the key sponsors of Jewish Achiever Awards this year. For the Arts, Sports, Science and Culture Award, you made sure that we could give an award to Jody Scheckter, the only South African to have ever raced Formula One, won the World Formula One Championships in a Ferrari at Monza, the only time a South African has ever won Formula One Championships. First time Ferrari ever won Formula One, and we could honor him as a member of our community at Jewish Achievers this year. Very much thanks to you. So amazing. Thank you for everything that you and Hollard do in building our community and building South Africa. Thank you so much, Hedy.
Lovely to get the opportunity. Thank you. Have a beautiful, beautiful evening.
Thank you. So Benji, as Hedy turns off her camera, we're going to start with just a little thought from one of the greatest thinkers of our generation, Yuval Noah Harari. And he's going to give us a little thought about money. And then as soon as he's finished, we're going to ask everyone on the panel to turn on their cameras.
What is money? You take this green piece of paper, say the dollar bill. You can't eat it, you can't drink it, you can't wear it. It has no value. But then come along these master storytellers, the great bankers, the financial ministers, the prime ministers, the presidents, and they tell a very convincing story. Look, you see this green piece of paper? It is actually worth 10 bananas. And I believe it. And you believe it. Everybody believes it. And as long as everybody believes it, it works. It really works. It enables us to construct extremely sophisticated networks of economic cooperation, which, as I said, gave us, and not the chimps, dominion over the world. And money is really the most successful story of all, because it's the only story everybody believes. Not everybody believes in God. Not everybody believes in human rights. Not everybody believes in the United States, but everybody believes in money. And everybody believes in the dollar bill. Even Osama bin Laden, he hated American politics, he hated American religion, he hated American culture, but he had nothing against American dollars. He was quite fond of American dollars. This is the most successful story ever told.
So if we can ask all of our panelists to turn on your cameras, please, and a huge welcome this evening. Benji, you've assembled quite an array of people tonight.
Howie, they were magnanimous, to say the least. It was really easy. And that's one of the beauties of South Africa. You've got access to these incredible brains and incredibly insightful individuals who can help us navigate this big story of whether we're witnessing a big democratization of the financial world, and we're going to get into it. So just up front, just to thank everyone for making the time. That is so kind of you, and I know you've all got busy days. Paul, one of the Q&As that have already come up is whether you're going to continue your stand-up comic career. So I'm not sure where. I just want to be able to click it off the system. So I'll leave it as a maybe, and they must watch the press for details. Howie.
So let's start with Dave Shapiro. David, tell us, what is the value of a business? How do we determine what's a good buy or a bad buy on the stock exchange? Are there in fact intrinsic, independent ways you can look at a company and say, yes, that one's worth 1 time's earning, that one's worth 5 times earnings? How do you look at the value of a business?
It's you can't make up your mind overnight. And I think this is where so many students of the market or investors try and find the value of a company. Because today we get more information than we can actually handle. So we download spreadsheets, we put in a few metrics that throw up a couple of measurements, and we think that we're going to find a good company. To find a company is like a relationship. You have to build this relationship over time, a relationship with a family member, a relationship with your wife, a relationship with a partner. You build it over time, and that's how you learn to value businesses. You measure them over a long time, and once you know what the company does, what product it's made, what its customers think of it, and so on. I can go on forever. What makes a good company? So it comes a lot more from reading, understanding, rather than just going through a spreadsheet and saying, this is too expensive, it's at a multiple of 26, or this is cheap because it's at a multiple of 4, a PE ratio. So I think it's where we go wrong. You've got to spend a lot of time and a lot of research to find those kind of businesses. You don't get a CFA and just overnight say, I'm now got a CFA, I'm now a chochem, I now can go out into the world and manage other people's money. It's not that easy.
So you talk about PE ratios. What is that? Just explain that to us.
Well, it's a measurement of earnings. In other words, how many years, if a company earns $1 or 1 rand and it's trading at 20 rand, it means that you're paying 20 times the value of its earnings. Listen, if that's going to grow, if those earnings are going to grow, yes, then it's worth it. But if those earnings are not going to grow, then it's not worth it. So that's effectively, it's a multiple of the earnings that a company earns. And you will pay as much for the company. You will pay for a company what you believe that company will earn in the future. If we're going to what the definition of an intrinsic value is, and I don't want to bore people here, because once we start going technicality, they're going to turn off. But I mean, fundamentally, if you go back to the original father of investing, which was Benjamin Grossbaum, who we know as Benjamin Graham. Benjamin Graham was the first analyst, security analyst. He wrote the book Security Analysis in 1934. And in that, he worked out, he said that you must look for companies that are trading at below their intrinsic value. And what's an intrinsic value is really the present value of all future earnings. You know, what's a company going to earn over its lifetime? Bring that back to a value today. And if it's trading below that value, then buy it because it has this margin of safety. But, you know, in those days, we never had computers. You know, if you wanted to find out about a company, you had to write to the New York Stock Exchange and say, please send me the balance sheet. So I think to a large extent, we've adapted Benjamin Graham's principles. You know, we've updated them to modern world. Even Buffett has changed the whole way that he approaches it. But fundamentally, a business is the present value of its future earnings.
So, David, if you look at, sorry.
I've heard that the first that who came before Benjamin Graham was Aesop, and Aesop said that a bird in the hand is worth two in the bush. So all Buffett says is that actually what David's saying is it depends when you're going to get the two, and that's actually, he says that was the first investment guru was Aesop.
But David, if we look on average on the Johannesburg Stock Exchange, how many times earnings? What's the average for a company on the Joburg Stock Exchange?
You can't average it out because we've got so many different businesses. You've got mining companies which have got which trade at completely different multiples because of the nature of their business. You then have all these overseas businesses that are trading here, which because they're overseas businesses trade significantly higher multiples. You've got the processors, the Naspers, the British American Tobaccos, the ABN Bevs, the Richemonts, and then you've got the local businesses who only do businesses here. So you can't find an average. I've got a wonderful quote from Howard Marks, who's a Buffett prodigy, and Buffett loves him. He says, you know, you can't really use an average. And he tells the story of a man who was 6 feet tall, who drowned in a river that had whose average depth was 5 feet. You know, so that's averages. So you can't really, use averages. One's got to break this all down into individual companies. And I come back to what I started out as, is that you've got to look at the market. You've got to look at the individual components. If you're going to start doing spreadsheet analysis and millions of that, you're going to become, I don't know, you're never going to be able to enjoy or get the passion of the market or learn about businesses. It takes time.
So, Jonathan Hertz, you don't have as much time on the market as David Shapiro, but how do you look at the stock exchange? Where do you find value?
In a similar way that David does. I mean, just 1 point or 2 points to add to what David said. I mean, you have loss-making companies, so that does something to your averages in a big way. What is their multiple? And more important than how many times earnings, David's point is how fast are those earnings growing? So that is actually the single most important point, is not whether a company, whether you're paying 10 times their annual earnings for that company, but how fast are those earnings growing? Because of course, if you're paying 50 times annual earnings for a specific company, and that company is growing at 25% a year, or you're paying 10 times for a company that's only growing at 3% a year, it's not going to take a lot of years before the company growing at 25% starts looking a lot cheaper than the company that was growing at 3%, even though it starts off looking more expensive. So those are just important points. So what do we do? How do we look? How do the places I invest and the people I like to give my money to manage invested? So they firstly look at themes, which is very important. So we look at different areas of the market, different businesses, different categories, different industries. And it's quite important to look at those industries because certain industries are doing well, or the environment is very positive for those industries. And then we look within those industries at the winners and losers. And of course, you can make money both by betting that a business will appreciate or that its earnings will grow, and by betting that a business will do very badly. In fact, much of what we speak about today in the GameStop story only existed because of a view on people betting that it would go out of business rather than people betting that it would do particularly well. So I like to invest in with managers and hedge fund managers and the like, who both can bet on things appreciating and things doing badly and make money both ways. And of course, Howard, if you have the luxury of betting both ways, then you don't need to necessarily know whether markets will go up or go down. All you need to know is whether a security in the market will perform better than its neighbor. In other words, if you bet that, or your research shows that FirstRand is a company that will do better than Standard Bank, and you bet on a relative basis that FirstRand will outperform Standard Bank, for example, then if the markets go down, provided that FirstRand doesn't go down as much as Standard Bank, you will still make money. And similarly, if markets go up, provided FirstRand goes up more than Standard Bank, you will still make money. So there are lots of tools out there.
John, is this a casino or is this science?
No, there's no doubt that there are skills. The best investment managers out there over many, many, many years have shown that they have an ability to outperform the market. There's a big debate on active versus passive management, but the best managers out there have added value and have beaten the market more often than not over a long period of time. Now, there are not a lot of those guys, but there are guys who have done it, who have ability to do it, and who have an ability to generate strong returns for their investors. And certainly there are people on this call who have made a business in doing that.
So Paul Theron, you've invested a lot internationally, particularly into the tech market. Do the same rules we've been talking about actually apply in technology? Because we're really betting on which way future technology is going to be moving.
Well, obviously, the phrase technology, Howard, covers a very wide array of stocks, companies that do all sorts of things. So it's a little tricky, but the core and most significant technology stocks, the big ones, the Googles, the Amazons, the Apples, the Facebooks, those really are hugely profitable companies already, and not to own them is, in my view, madness, because they are leading the world in terms of the growth. They're leading the world in terms of profitability. They're doing things in our economy which are hugely significant. Of course, the time to buy them, could be today, but the time to really buy them was a decade ago. I think the COVID experience has given them all a huge boost. So I'm not too concerned about, price to earnings ratios and conversations about, balance sheets and that sort of thing. I just think you've got to be part of where the global economy is going, and that's definitely where it is.
So give us a few names of kind of new age stocks that you think are definite bets and ones that are really risky.
So I think those that are broadly in the search and that category, obviously companies like Google, more broadly anything in the social media arena, not everything, you can go too far down the feeding chain. But in my view, companies like Facebook ought to be owned. The e-commerce leaders clearly ought to be there. So stocks like Amazon. I think you can then broaden that into anything to do with payment technologies. So stocks like Visa, MasterCard, PayPal. I'm very keen on the crossover between technology and healthcare. So anything that has to do with genetic medicine and that kind of thing, I think deserves a place in one's portfolio. And on it goes. I think streaming media is very exciting. So companies like Netflix, Disney, that kind of thing. So these are real businesses delivering real products to people around the world. I think you want the ones with very strong balance sheets and global operations. So I'm not all that sure that you want to be dabbling in the Chinese stocks where the people in Beijing are half crazy and have no qualms whatsoever about wading into those markets and regulating the hell out of them. I think you want to not necessarily bother with developing countries and their offerings in that area. And you want to go straight to the top end of the spectrum in this regard.
Okay, things like Twitter, Snapchat.
Those are in the B division, those are in the second and third division. Mark Zuckerberg once described Twitter as a clown car that drove into a gold mine. In other words, it's not a particularly well-run company. I do own the stock, but I think you're better off because I think people underestimate the growth durability of companies like these. So they think that you have to go find, the third most important stock or the fourth, biggest e-commerce player in the world's, fifth most important continent in order to do well. You don't really. You just need to go, in my view, with the major players.
Okay, so I think we describe the three of you as maybe old school investors, for want of a better description. we would describe maybe Run and Tumelo as maybe new world investors. Run, you came out of brick and mortar. You're one of the founders of the Creative Council. You sold out for a ridiculous amount of money, but you tweeted, you've made more money in cryptocurrency than you ever did from the fortune that you made in the ad agency.
Yes, that's true. I must admit. So yeah, I mean,
listening to all of these people, are they stuck in an old paradigm that doesn't really exist anymore in the real world?
Look, I wouldn't go as far as to say that. I mean, a lot of these people are very astute people. In fact, I remember Dave Shapiro was one of my one of my idols when I was a stockbroker back in the day. So it'd be very amiss of me to say something like that. But when I sold the Creative Council, I sold the Creative Council because I believed that business was linear. And when I mean linear, what I mean by linear is that you have to work harder, you have to have more resources to make more money. So if you want to make more money, you have to hire more people, or you have to invest more money. And that bothered me because it meant that the more money I wanted to make, the harder I had to work. And that formula didn't work for me because I was getting older and older and my energy levels were going down and down. And I thought, I can't keep doing this. And so I went on this mission to understand how to make money quicker with less effort. And I stumbled upon this thing called exponential businesses. And exponential businesses are things like Uber or Google, where actually, whenever a new participant joins your ecosystem, the network becomes more valuable. So if you think about Facebook or Instagram or WhatsApp, every time someone new signs up onto WhatsApp, WhatsApp becomes exponentially more valuable because more people can WhatsApp more people. And the same thing with like Facebook or Instagram. Every time a new user joins, then the network becomes more valuable. And that's what I discovered. I discovered this thing called exponential networks, or the network effect. And when I discovered that, the penny dropped. And if you think about things like cryptocurrencies, and I'm sure we'll get there, cryptocurrencies are all about network effect. The more people use them, the more valuable they become. Therefore, the more people use them, therefore, the more valuable they become. And so for me, the truth is, whenever I look at a linear business, at a linear anything, it just doesn't make sense to me anymore. I don't speak that language anymore. My brain's not wired like that. So when people talk to me about linear businesses, I get a short circuit because for me, my brain started to think in exponential.
So let's actually bring in Tumelo at this point in time. Let's turn on your microphone. Good evening. You're sitting in the dark. You have load shedding your side of the world. It's nice to know, even with a last name like yours, you still sit in the dark like the rest of us. So
of course, I have to. I mean, Batman has to do what he has to do, you know.
That man definitely does. So, Tumelo, you're involved in wildlife, you're involved in cryptocurrencies, and you're involved in blockchain. When you listen to kind of this previous set of people that we've gone through, do you say, my goodness, guys, you just don't understand how the new world works?
A little bit of everything, eh? But look, I think primarily, firstly, like as Rand said, we've learned a lot from these people that are on the call. We've learned a lot from a lot of the experience in the past. And let's say with us, I mean, I'm probably the youngest guy on this call. So let's say for me, what the blockchain industry for me is an opportunity, a real opportunity, right? So in 2005, when I was at St. Stadiums, we actually came top 5 in JSC Schools Challenge, where there were about 20,000 schools. And they participated in the JSC Schools Challenge, where you basically trade with virtual money. And we came top 5, but we were kind of like copying a pro trader's a trading strategy. And also at that kind of moment, I realized and I decided, coming back to what Rand was saying, I didn't want to just get into a normal job. I didn't want to just, you know, I felt that, you know, I had a greater purpose. And, you know, the following year I matriculated, and that's where Facebook started, 2006. And, yeah, we've been kind of chasing the dream ever. And I discovered Bitcoin in 2010 and, started receiving payments with Bitcoin. And at the time, we didn't know what it was going to be today. It was literally like token money, like money in a game. So if you're earning money in like Grand Theft Auto or Diablo or Warcraft, it really means nothing. You're not going to buy a Coke or a sandwich out of, game money. So, coming back to that is that you step into these legacy systems and there's really no place for you as a young person. And, the only way to do it is to immerse yourself and to grow. So with us, it's coming with the blockchain, 2018, we were invited to, we were selected as one of the top 20 startups in the world at the World Cryptocurrency Economic Forum. And primarily because we had developed a solution for the first blockchain, for the first investment platform on the blockchain for conservation. And, at the time there was almost nothing like that. And coming back again, the whole idea of the blockchain is to create things based on purpose, right? And firstly, one of those is financial freedom.
I want to stop you there because I think a lot of people watching are going to say, what is this blockchain?
What is the blockchain? The blockchain is the money of what the internet is, right? So let's say if you were to think of what the internet was 20 years ago, 99, 98, pre.com boom, that's what blockchain is really right now. And we are going into the money of it. It's a decentralized system that's public, that's transparent, that has a lot more trust than any economic system right now, and a lot more sophisticated as well. And the fact that we own it. So coming back again, why would I, as a young person, want to be a part of this? Because, here's where all the opportunities are. This is the unbuilt world. We're still building, we're still learning. And, that's why, let's say there's, even with us, we kind of slowed down with the wildlife in the past 2 years, and we focused on OTC and more the core business itself. But now coming back,
sorry,
OTC, over the counter. So this is, selling Bitcoin to exchanges, selling to 100 individuals. But then coming back into it now, this industry is graduated, right? Now it's actually a time for more use cases because we've also learned. So that's why we got back into the wildlife with a distributed fractional ownership platform to help us raise money for the northern white rhino.
So let's just understand that for 1 second, and then we're going to go on to our first story, which is relating to GameStop per se. But you telling me through the blockchain, I can own a part of a buffalo or a part of a white rhino or a part of an endangered species?
So coming back to purpose, absolutely. So yes, you can own a fractional piece of northern white rhino DNA, and you can help us, as well as Dr. Mornay Delaray, who's one of the two teams in the world of veterinary scientists that are trying to bring back the northern white rhino. So yes, you would be helping us with conservation and helping the world bring back an endangered species, of which there are only two. So coming back, this is where we've created ways where, we kind of solve world problems with money and with creating money, with digital money.
And my share certificates, for want of a better description, in the Rhino would in fact be stored on the blockchain, and that's how I would secure my ownership.
Absolutely. They'd be there forever and probably perpetuate after you are going to expire, but they'd be there forever. And your share certificate, everything would not be tampered, harmed. We'd have to have, I don't know how many nuclear explosions, but after that, if the internet turns on, you still have your assets and you still be your owner.
So Benji, one of the greatest examples that I've ever heard for the blockchain was someone told me the story of refugees from Syria, all of whom had to flee Syria, and they left without the university certificates or their qualifications or their degrees. And there was nowhere that information could be stored, that when they arrived at as refugees in other places of the world, to say, well, actually, I've got a PhD from the University of Damascus. There was nowhere to store that because there is no central database of information, of money, of anything else.
The Russians that arrived in Israel had a similar problem where, a lot of their qualifications and couldn't be verified, and they didn't have a process of verification. I mean, the protection of assets has been with people for a very, very long time. I mean, I mean, one of the reasons why they say so many Jews are involved in diamonds originally was because the assets could be kept on them. So this idea that we could store an asset in a way that's always there, no matter how many nuclear explosions could happen, is something that has worried people for generations, you know.
So let's dive into our first story. Let's watch a short little clip about something called GameStop, and then let's throw it to our panel.
The stock markets, America's #1 supplier of Great Depressions. As volatile as the stock market can be, this has been one of its wildest weeks yet.
Craziest business story out there. An internet trading mob is driving GameStop shares higher. It appears to spite short sellers. Look at the stock. It's up more than 680% so far this year.
They realized that all of the institutional investors were hedging on GameStop, so they just bought a bunch of call options, bought a bunch of stock, and created the gamma squeeze that you saw on Friday.
Okay. I don't know about you, but that explanation is way too complicated. So there's a store called GameStop that sells video games. Not a great business to be in since games can be downloaded now, which is why the serious investors decided to short GameStop, which means to bet against it. But the Redditors are gamers who have a semi-ironic love for the store, so they started making memes encouraging each other to punish the serious people by buying worthless GameStop stocks. Now, instead of failing, GameStop is succeeding wildly. Not really, of course, not as a business, but come on, stocks are never real. The serious people have already lost $5 billion, and some giant hedge funds have gone bankrupt. Got it? Good. And these Reddit investors are already moving beyond GameStop. Now, they're pumping up the stock prices of other failing companies like Bed Bath & Beyond, AMC movie theaters, and even Tootsie Rolls. The only reason that these Redditors have been able to pull this off is because of the internet. Yeah, think about it, like Reddit and all these social media, they make it possible to get together with people who think like you. This wasn't possible decades ago. Like now, if you want to take down a hedge fund, you can find people to help you do it.
So Paul Theron, tell us, is this a game? Walk us through this idea, the entire story of GameStop. Explain to us what happened. Let's unmute you.
There we go. Am I here?
Yeah.
Look, I think Trevor Noah did a reasonable job of giving us some of the talking points there. But in my mind, the whole GameStop episode is an absolute disgrace. It's an old-fashioned pump and dump scheme. The company is not really worth anything at all. It's a tired, rundown retailer in a time where people are buying games online. It's been seized upon by a bunch of crazy people, and they're using gamified investing, so-called speculating platforms like Robinhood, in order to have fun and drive it around. It's not investing by any means. I mean, Roaring Kitty is wrong. He's a funny guy, Keith Gill, and he's, pumping it up, and there are fun memes coming out of this. But it's going to end in tears. It's currently busy having another surge up. It's all fun and games, but those of us that have been around more than a couple of years have seen this time and time again. We saw it with the traded options market in the JSE. We saw it with warrants. We've seen it with single stock futures. Every single market has these kinds of stories. It's really meaningless, but it's really being fueled by the new era of investing opportunities using platforms like Robinhood, which ostensibly offer trading for free. But as anybody who knows how the market works, Wall Street loves the dumb money. So it loves the fact that there is order flow, which is being generated by these idiots. And as a consequence, platforms like Robinhood are making money that way. But, the people who are going to lose out here are the pigeons that are coming in right at the end. So those that have bought the stock and are creating the memes and creating the excitement will one day exit. It's the retail twits that come in right at the end to take GameStop off the hands of the professionals right at the end, who really should be ashamed of themselves.
So Paul, explain to us, this business you say is worth close to nothing. It's a failing business. It's bricks and mortar. It's not really worth anything. They get a new CEO. People, the hedge funds decide it's going to fail. So they do something called short the stock. What does that mean?
Well, I think everybody that follows the market will understand the shorting stock really just means borrowing it and then selling it and then hoping to be able to close the deal, buy it back at a much lower price. So funds like Melvin Capital, run by Gabe Plotkin, that's exactly what they were doing. Their view was GameStop was ludicrously overvalued. And this bunch of Wall Street bets types decided to gang up on him. So in other words, they basically started buying the stock, or buying at least derivative positions in the stock to push it up. And those are the ones that Trevor Noah there referred to as having been put out of business. It's apparently not the case. You know, they didn't get put out of business, and there are obviously still opportunities for them to enter the stock short now. So it's the current flavor of the day.
So let's just go through this. So the hedge funds bet the stock is going to go down. A bunch of people on social media, on Reddit, say, let's go and actually take on the hedge fund. They've got a specific time by which the stock goes down. Let's, in fact, drive them out of business by pushing the stock up. If we all en masse go and buy and pay a higher and higher price for GameStop, the price is going to go up rather than down. The hedge fund is going to lose money.
Exactly. And then they might even end up in a short squeeze where effectively they have to put up more and more collateral in order to cover their short positions. And they're getting burned to such an extent that they, in fact, are run out of funds and are forced in that instance then to buy back the position to close out their short. Then you have the, almighty short squeeze, and the thing goes even higher. So these kinds of games.
So the price of GameStop for a share worth almost nothing is just skyrocketing. So it's a game. It's got nothing to do with value whatsoever.
Yes, and as we know, what people do by investing in the market, buying ordinary companies in order to save for their retirement, cautious and careful investing is not nearly or in any way related to speculating, having a flutter with money that you can afford to lose. So this whole world of longs and shorts and hedge funds is one, part of the professional investing market. But this kind of, pumping and dumping in order to take on the hedge funds and have a little bit of fun, I don't think it's about democratization. I don't think it's about, the small guy taking on Wall Street. It's just a sideshow, man. It's a circus act.
So that's the sort of thing you would stay far away from, enormously dangerous. We're going to ask, Jonathan Hertz spoke about hedge funds and the fact that he quite likes the idea of hedge funds. So we're going to ask him for a comment in a moment. But before that, Benji, explain to us this thing called Robinhood. What is it and how does that work?
So how are we to explain anything on investing with such an esteemed panel feels completely inappropriate, but I'm going to take a stab at it, and then obviously the experts will kind of correct us wherever we've gone wrong. But Robinhood, what they presented themselves at is an app that allows free market access and allows you to invest in the stock exchange, which was previously the domain of, let's call it, had much harder ways to access it. So this app came about and said, you trade and it's all for free. But as we know, and as Paul mentioned, is that if you are using something and it's for free, then you are the product. So actually what interested me, and I know you and I have discussed this a lot, is that I initially thought how they made money was I joined there, and then they gave me my name to someone like David Shapiro, who could then sell real investments to me or to a broker, but actually not at all. They don't make money like that at all. They've got 4 regular ways that they make money, which is very traditional. Most brokerage, they pay interest on their cash accounts, anyone with money in their accounts, which are not too many. They've got a premium service, which they earn money from a premium service. For people who have a margin, that means you might have $10 in your account, but you can buy $100 worth of cash. For that difference, you pay interest on that. And then they've got like a credit card type thing that you pay for per transaction. And those are all very, very traditional and not controversial. The most controversial is actually the data that is actually what they are trading, and it's called payment order flow. It's rebates, and what happens is people get together and they want to buy a stock. Let's call it Standard Bank, and Robinhood doesn't buy that in the open market. They give that to another, call it a broker. I know we don't want to use names, but someone who then buys it for them. All of this can happen within seconds, and that trade flow, or that idea of what people are trading, that is what they are selling. It's about 55%, according to, I've got some records here. I mean, it can be as high as 60% of the trade of their revenues is the trade flow. So me, you, Jonathan, all on Robinhood, we all want to buy a stock, and then we want to, they take all our data, they give it to it. It happens to be, we don't know each other, but it happens to be we're all buying the same stock. They give it to they call it a market maker, but let's call it someone buying the stock for them, and they get a rebate for that. And that's very interesting, and again, that's the big question. Is the one argument is this way of letting my trade be part of a whole group of things. I'm a small investor. I can be lumped with Paul and Jonathan, not in their professional capacity, but if we were individual individual investors, and that gives me the access to it. That's the one argument, that payment order flow process. The other argument is this is something that called front running, which used to be illegal, and people have gone to jail.
Well, I want to stop you there and ask David Shapiro, because Dave Shapiro, the way this works is, if I'm going to put in an order for R1 million of Standard Bank, what Robinhood does is they tell someone else that there's an order for R1 million from Standard Bank, allowing them to transact first before my transaction goes through. Now, we've seen even within our own community, people do that and go to jail in South Africa for that. Is that not front running? Or are we, as part of this, are we not agreeing to allow someone else to buy the share before us because they know there's a big order coming?
Well, David, before you answer that, I just want to add to Howie's question, just so that anyone doesn't think it's like an enormous industry, that Robinhood this year has 13 million active users, people trading. I don't know how frequent, but 4 years ago, or 2017, they had 2 million. So Howie's question is compounded by the fact that this enormous flow of information coming their way. David?
So just before Dave answers, Benji, how much did Robinhood make, or how much will they make this year by selling your data to someone else before your trade is made?
So let's just say I stand to be corrected, and I'm not in breaking news. I went on the internet, got Robinhood's revenues. So last year, 2020, $682 million, with 40 to 55%, they say. I've read many reports that it's higher. So let's agree on 50% of it. So give or take $340 million they get as a rebate back from a provider.
So Dave Shapiro, they're making 5-6 billion rand a year by selling your data of what stock you're going to buy before you actually buy it. Isn't that illegal?
Yeah. Well, it hasn't been proved illegal at this stage. It's like what's it, the tortoise and the hare. What happens is that they both start off on a race to get the share. The thing is that the tortoise goes along, but the hare has got a super duper computer and can get to the finish line before and buy the shares before the tortoise's order comes in. And there was, there've been books written about high frequency trading and how important it is. What's it called? The
Flash Boys is
the Flash Boys. if you read the flash boils, you'll read how they did it and how they managed to get in before these orders. But I think, Howard, you said it, and Benji said it, there is no free trade. You are the product. So be very, very cautious wherever you are, whatever industry you're in, where people start to offer you something for free. Somewhere along the line, there is that commission. But just to extend this argument, this is nothing new. This has been around since since the ships went out to the Dutch East Indies or went out to the East Indies to get spices, and you started to buy a share of a ship or of a consortium. You were part of a consortium. This is nothing new. In our days, before we had the internet, what used to happen is that we would have a ticker in our office, and people would gather there. And this was the modern day Reddit. And they'd all sit around there looking at their ticker tape, discussing the market and deciding what they're going to do and where they're going to put their money. So private involvement in buying shares is really as old as the stock markets themselves. And I'm on Paul's side. I think this is just a sideshow. When we analyze and when we understand the size of this deal of GameStop, relative to the global market, it's nothing. It's like people taking Avenge. Avenge is trading on our market at 1 cent. And the King David boys they always used to win the stock exchange game, because that's exactly what the King David boys did. They would play. They would say, okay, listen, the whole game was involved, or was designed to teach you how to read the market and how to analyze the shares. And the King David boys say, no, this is not for us. This is, we don't want to do that. We're going to win this competition. And what they used to do is they used to get the 1 and 2 cent shares or 3 cent shares and really give them a bit of a rev, double them, treble them, and win the prize by miles. So every day, if you go and see, they were smart. They played that market. But in real life and in the real big game, it's very, very small. The media love it, and Trevor was making fun out of it, etc., and it becomes a comical act. But in real, as Paul says, this is just a minor sideshow of people who actually ganged up and pumped and dumped the stock. Remember the boiler room? This is a very, very similar type of situation by very smart people who are using some kind of mechanism to make to make a bit of profit. But it's really a nothing.
But Jonathan Hertz, we asked the question to you earlier, is this a casino? You said not, but it does sound like a game. And if you don't know...
It's absolutely a game. A casino, you've got a 50-50 chance, or 46% after they take the rake. Here, you've got much less in the real world.
Because,
you've got no chance.
The lesson is, if you don't know who the sharks are, you are the fish.
Yeah. So I want to add to John, and John will answer this, because it does get, I hear that it's a sideshow. I hear that 13 million people who are using a Robinhood app should be very cautious. But it gets very complicated, because as this GameStop started going up, suddenly Robinhood users weren't allowed to trade in GameStop. They were stopped from trading. And that created quite an interesting story in terms of access to information and things like that. I'm interested in Jonathan's view on that involvement on the hedge funds on that side, and what happened on GameStop, for an example, on the other, whether
and there's no doubt that the prohibition, which let me be clear, was not the SEC prohibiting this. This was a decision made by the company Robinhood to limit their own clients from trading, because there was concern that perhaps there were certain security violations, or that the movement was so crazy that they themselves could be sued. I mean, let it not, they may make $300 million from selling information. Maybe it's a lot more than that. Certainly I've read that it's a higher proportion than 50%. But what I would say is they still don't make any money. The whole show of Robinhood is not a profitable enterprise. But it seems that today being a profitable company is not that relevant. The world is obviously moving past profits are not that important. But what happened here was they actually got scared. The people who ran Robinhood put prohibitions on their own clients from trading. That wasn't a requirement. So, and there was a massive outcry as a result of that, because
Jonathan, can I just explain something? And I think Paul will appreciate this as well, having been in the stock market. Robinhood clears through another member. And in many cases, you get a mismatch between what your clients owe you and what you owe the clearing member. And these are big numbers. So, in our markets here, we have a very similar situation where you can get massive trades going through. And what happens, you as a broker have to pay the buyer, because remember, the clearing house guarantees that trade. Now, you go to your clearing member, and your clearing member says, listen, you owe me X, and you might only get that money from the traders the next day. So you get this mismatch. And you have to manage that. And that's why they ran to the market in order to raise money, in order just to balance their books. So it's something that people don't, that people outside of the market who are not in financial markets don't understand this clearing. And it can only be a one-day situation, but it's big money. And you might not have the resources to actually get your bank to cover you. So sorry, Jonathan, I just wanted to explain that. Sorry.
So just to give you the numbers, you mentioned earlier, Benji, that one of the places where Robinhood makes money, and in fact, many brokers make money in this area, is if I want to buy $1 million worth of GameStop stock, I don't necessarily need to have $1 million in my account. Now, what the broker does is the broker behaves a little bit like a bank to make it more understandable. So if you've got $100,000 in your account, they may allow you to buy $1 million worth of a stock, because they will charge you interest on the $900,000, right? Now that's fine in the normal world, where stocks are very liquid and don't move very far. A stock might move 2% a day or 3% a day or 5% a day. And normally they're not going to give you $900,000. They're going to give you, $500,000. So they have protection unless things get crazy. In this case, the movements were so massive that they were in trouble. They did not have sufficient, let's call it margin or collateral for the trades, or they were worried if things reversed, and things were reversing aggressively in both directions, they could be caught with a position where the client had $1 million stock, he lost $900,000, but he only had $100,000 with them, so they could have gone bust. Also, the people that they clear through, as David said, were actually increasing the margin required, because they were saying in very, very aggressive stocks that move, 100% a day, it's not good enough anymore for you to put down $100,000 to buy $1 million worth of the stock. So that's kind of what happened in this particular case. So this was A, them worried that there were some securities issues, and B, them financially worried about their business. So that's the issue.
John, I want to turn to Ranoina, because this name dump, or this term, pump and dump, is used quite often within the crypto world. What does it mean, and how do we see it play out?
So let's take a step back. So what everyone's talking about here is a group of investors who are, according to everyone on the panel here, making irrational decisions. The irrational decision is that they're buying a bad company and they're following the traders. So I want to analyze that, because that'll take us into what a pump and dump is. So would you perform a surgery if you weren't a doctor? Yes or no? You wouldn't. So it's the same thing when you're investing in shares or investing in cryptocurrency. If you want to try and perform a surgery and buy shares, then you need to have some kind of qualification and know what you're doing. If you're going to come in and gamble in like a stock market, then like people say here, you are a product. Okay, you are the product. So let me tell you why I say that. Because if GameStop is really worth nothing, when these people buy it up artificially because they're all following one another and pumping up the price, then it's an opportunity for astute investors to say, hold on a second, this stock is now overvalued, therefore I can short it or sell it and I can make money. So you need to know what you're doing. And unfortunately with these Robinhood investors, they do it as a game, they do it as a gamble. They don't understand what they're buying. They're not investing, they're trading. And trading and investing are two different things. Investing is around the fundamentals of something, and trading is you're gauging market sentiment. I'm very scared of trading. Trading scares the living daylights out of me. Why? Because I can't read market sentiment. What I can do is I can analyze something and I can take a long-term view and I can put my money and wait for my long-term view to pan out, or for the market to show me that my long-term view was wrong. And that's the difference between investing and trading. Now, let's go into pump and dumps. What is a pump and dump? A pump and dump is when we get onto a group call and we say, look, we find a share that's, or a crypto or a share that's easy to manipulate because there's low liquidity. There's not a lot of supply. And what we do is we coordinate that we're going to buy it and then we're going to pump it on social channels, Reddit, Twitter. So for example, I say I'm going to buy Bitcoin. You can't really do it on Bitcoin, but I say I'm going to buy Bitcoin. And I'm going to tell you, you're also going to buy Bitcoin. Dave's going to buy Bitcoin. Tumelo's going to buy Bitcoin. And we're going to buy this thing. And as we buy it, once we buy it, we start telling everyone to start buying it. And we get this momentum, this snowball effect. And then the price goes up. And when the price goes up, we dump. And that's why it's called a pump. And then we dump. And that's exactly what it is. That's exactly what happened with GameStop. So the hedge funds were short. That is coincidental. But these guys got into a social media room and they started buying this GameStop share. And there's 3 million people in this Reddit room, and they all coordinated to buy it. And then this started the price going up. And everyone saw the price going up and thought, wow, I'm going to get rich. And so they started buying. And as the price went up, these same people that coordinated the pump and dump started to sell. And then the price went down again. And it's a fundamental thing. And that's why I say, if you're trading, good luck. There are traders who can gauge market sentiment. They can do it using charts. They can do it using listing devices on social media. That's a profession. That's surgery. You need to know exactly what you're doing. I'm not qualified to trade like it. And I'm sure that a lot of people on this call aren't qualified to trade like it. But you may be a good investor. And that means that you take a long-term fundamental view on something. And if you do that, then these things can go up, but GameStop will go down again because, like everyone says, it's a dying business.
So let's go to Tumelo. Before we do that, I'd like to get Tumelo's take on what we're talking about, because he told us he thinks he's the youngest member of this panel, and he's raised his hand, I see. So want to ask the question, if you look at younger investors, are they following a fashion, or are they actually serious about finding genuine assets to invest money in genuine assets, or is this a quick rich scheme?
Look, Howard, very, very good question. And just as David was saying earlier, and even with Rand, I mean, firstly, like this all just sounds like a scam. It's just like you have all these high-level investors, all these hedge funds. It's just what can I say? It just doesn't sound very honest. And I mean, even from our side, when you're doing a transaction, you're doing it with the full commitment of what you have in your wallet, right? So you can't be making things up. And when we start hearing these things being made up, and this is just all investment talk, very highly educated guys with CFAs, this, that, ABDC, UFG. At the end of the day, you guys are all orchestrating the end to the world, like we did see in 2008, where we have, I mean, this is no different from the subprime crisis, where you're literally signing off checks to people that will never be able to, meet the commitments of these checks. And in no way is it different, but like a GameStop subprime crisis, it's all the same thing, just orchestrated differently. And unfortunately, it's by the world's smartest people. David, you mentioned the movie Boiler Room. You go look at Margin Call, the same story, where you had, some of the smartest people in the world having all that power. And let's say that all that does is it conforms more and more and more to centralization, right? Where you have very few people who make those decisions for all of us. Whereas in the blockchain, we make decisions for ourselves. You go look at things like the Ethereum Foundation. It's a foundation that dictates where the world goes, well, where the Ethereum, what happens with Ethereum, the updates, the scalability, now there's new protocols. And this is by us that we're doing, right? We're not putting the world on their knees to chop them off and then like slit their throat at the same time. And it's like, well, you're dying in every single way so it's just, for us, it just sounds like more problems that the world is just going to have to solve later. And let's say I'm going to have to solve them later because I'm going to be around here hopefully longer than all you guys are. And these are the problems we're inheriting. So sorry, we don't want these problems. I'm sorry. I'm kind of like, I'm starting the fire. There needs to be a fire here. I'm starting the fire. So
I've seen how much meat you eat, Tamila. I'm not sure you're going to be around longer than some of the people on this stat. John, a quick comment from you, and then we want to move on to the issue of Tesla.
Sure. I do want to say, slightly controversially, that there have been cases on these pump and dump situations where in the US, you're able, as the management of the company, to issue shares without going through a massive process. So in some cases, these firms that had a lot of debt that were pumped, so to speak, the corporates issued shares and repaired the balance sheet of that company. So not in each of these cases are these companies now in worse situation than they were before this happened. Some of the management have actually acted quite swiftly and done quite a good job at using their elevated share price to raise more capital for the company and actually rescuing the company. It's a sideshow, but it is interesting that has happened.
So I want to take a quick vote on our panelists. Does anyone on the panel own shares in the company Tesla? Elon Musk's share, Electric, Paul, Run, your two shareholders. Let's watch a little clip about Tesla, and then let's come back, Paul, and you tell us your thoughts about Tesla.
Credo has been helping the South African Jewish community invest globally for more than 20 years. Our range of investment solutions includes the Credo Global Equity Fund, a collective investment scheme subject to the highest European regulations. The Global Equity Fund allows investors to access top-quality global companies in a liquid, tax-efficient structure. Find out more by asking your financial advisor or speak to Credo directly. Talk to us today.
So in fact, Danny, before we go on to Tesla, we're going to run a quick poll. Credo, a lot of South Africans invested through Credo in London. If you would like to speak to someone from Credo, are we going to run a poll, Danny? A yes, no. If you'd like someone from Credo to give you a shot, just to talk to you about investing overseas, because a lot of the things that we're talking about, a lot of the shares that we're talking about, whether it's Google or Facebook or Tesla or any of the others, you actually need to trade many of them overseas. And in fact, Credo can assist you very much in being able to do that. So we're just going to leave that on the screen for about 1 minute. We've got about 30 seconds left. So if you would like someone to contact you to talk about investing through the Credo platform on the international stock markets, absolutely, that's the place you vote yes. You don't have to vote no if you don't want to, but we want to give those people an opportunity who are looking to take some of their money offshore to be able to do that. John, you play very much in the offshore space. When you recommend to clients how much of their portfolio they should hold offshore, what percentage do you tell them?
50% is my general view, but you can't answer that question because people have different needs, different income needs in this country, different liabilities in this country. Everyone is entirely different, but on balance, if you've got money that you don't need in this country to provide you with an income, 50 is a kind of a general measure, but really every single person is entirely different.
Great answer. Danny, let's watch our video about Tesla.
So here's a toughie for you. Which side are you on? Cathie Wood, who thinks Tesla's stock is going to go up and up and up, or Michael Burry, who just recently shorted Tesla stock and thinks they're going to go down potentially up to 90% just this year alone.
And that is Tesla, because you made a lot of waves by attaching a $4,000 price target to the shares at one point.
Yes.
Let's bring in ARK Invest CEO and founder Cathie Wood. Cathie, welcome. I know 15,000 a share is not your base case.
No.
It's your reach case. What is your base case of where this $700 stock is in 4 years?
Yes, the base case, it's a 5-year target, so the end of 24, it's $7,000.
And she said that when the stock price was around $700, and if she can get it right once, can she do it twice? Well, Michael Burry has other ideas sitting on the other side of the fence. He thinks there's absolutely no chance. And in case you don't know who Michael Burry is, he's the real person that Christian Bale's character in the movie The Big Short is based on, about the American housing crash in 2007-2008. So first of all, here's how all of it came to light in December 2020, and it all started with a tweet. As all good things do, at least these days. So in this tweet, Burry wrote, "So Elon Musk, yes, I'm short Tesla, but some free advice for a good guy? Seriously, issue 25 to 50% of your shares at the current ridiculous price." Just very quickly, let me fill you on shorting, and basically it is betting against a company's success. Instead of buying a stock at a low price with hopes that it will climb, you borrow shares through a broker so that you can then sell those shares while the stock price is high. Then when the stock price drops, you buy those shares back at the low price and return the borrowed shares back to the broker, and then you keep the profits. So it's really the opposite of what we normally do. Now this is where it gets interesting, and Michael Burry's story starts to come together. We can see his reasoning. If we look down the spreadsheet to Tesla's revenues, it's $24.5 billion. The market cap is $646 billion, and the EBIT is minus $70 billion. Burry's entire point, he feels that Tesla investors are behaving as a cult and jumping on the bandwagon based on hype for future performance while ignoring current performance. The data suggests that the current results of Tesla are not that important to people. They're looking forward into the future to what Tesla might achieve, and that concerns Burry because they haven't achieved it yet. Basically, he treated the house market as if it was in a bubble, and now he's treating Tesla as if the stock price is in a bubble. And what do bubbles do, my friends? They burst. Now, while the numbers he crunched had a lot of logic and reasoning behind them, there's one key factor that I think he was missing, and that is that Tesla is not like other auto manufacturers. Tesla are just as much a hardware company as they are a software company, whereas these other manufacturers are miles behind in the autonomous driving. They're miles behind in the battery production. They're miles behind in almost everything to do with electric vehicles. And let's not forget that Tesla's fast becoming one of the biggest battery manufacturers in the world, while in the other camp, I can acknowledge that it is very difficult to understand how Tesla, at their current sales figures, their current profitability, have the market cap and the stock price that they do. It is very hard to justify, no matter how exciting their future is. Future is not proven. That's all speculation. And while it does look incredibly promising, it's still speculation. Typical PE ratios round about 15 to 40 most of the time, and Tesla's PE ratio is 1,280, which means that investors are willing to pay 1,280 times their earnings just to own stock in the company. And to give you a comparison, Apple's PE ratio is 36, Amazon's is 78, and General Motors is 12. So you can see that something in that picture seems off.
So Paul Theron, something in that picture seems off. You're a holder of Tesla. Tell us why the price has gone up 20%, down 20% in the last 2 days. It's almost as volatile as Bitcoin at the moment. Why are you holding Tesla?
Look, I bought Tesla first a long, long time ago. And so I'm particularly thrilled at how Elon has done. I think the electric vehicle opportunity is huge. Many countries around the world have basically announced that no internal combustion engines will be allowed to be sold beyond, a period of years from now. Countries like China have enormous air quality issues. So I think the future of the mobile fleet, the vehicle fleet in the world is electric. Tesla has a wonderful position in that space. The cars are much beloved and they're synonymous with the concept of electrical vehicles. And then, as the guy in the video said, they're also doing batteries. They're also doing all sorts of connected devices and so on and so on and so forth. So the market is guessing that Tesla's production and profits in years to come will be very much significantly higher than they are now. People have been shorting this stock for years and years and years. Just because somebody made profit like that Michael Burry guy shorting the housing market when it fell apart in 2008 doesn't doesn't mean that he's guaranteed to be correct on all of his subsequent buys. So, obviously, my view would be that it is a company worth owning in your portfolio. I don't think it's wise to put your entire life savings in there. And that's underlined by its most recent couple of weeks of trading, where it's been up a third and down a third and up 20% on a day. That's ridiculous. But I do think it is a company with a very, very bright future. And if you're opening up and getting started with international investing, it's a stock to own, perhaps at around a 5% weighting in a portfolio.
Okay. Dave Shapiro, you don't have any money in Tesla. Tell us why. We're just unmuting you.
No, I should have. I agree. Paul was right. At the time, we didn't recognize what Tesla was. It happens. It bypassed us. We looked at it as a motor manufacturer and not what it really is, a software company, a battery company. And as Paul rightly said, or as the gentleman in that video said, they're way ahead of their competitors when it comes to autonomous vehicles. And that's where we're going. Over the next, you keep hearing ESG all the time, and green tech and various other themes like that. And also, people want to own electric cars. Sooner or later, they're going to shy away from owning the old motor cars that we know, fuel injected or whatever they are, internal combustion engines. We're going to go green. And I think you're going to want to own a vehicle like Tesla. So I think it's an incredibly popular vehicle. We don't have it here because we don't have electricity. So we can't drive Teslas. We would love to drive Teslas. But, that's one of the drawbacks of the South African economy. But I think Paul's right. I think that we've got to start looking at similar companies and that, whether they are in battery technology, whether they are in autonomous vehicles and that. And I just want to put something right. We are not old economy investors. You've heard what Paul said. And if you look, and I like what Rand said earlier, if you look at the businesses that we're investing in today, they are those, call them the platform companies that are expanding exponentially outwards. They're gathering more, more not disciples, but more followers as well. And that, and I think Tesla is one of these businesses. You can't explain its PE. Don't try and explain it. And I want to say another thing as well. When you start to look at multiples and PEs, believe me, if you would have gone to Amazon or you would have gone to Google or Alphabet, as it's called today, Facebook, etc., you would never have bought it along the way simply because its PE was always out of reach. And yet these are high growth companies. And there's another point that I want to, and this is where I love Elon and I love these big platform companies we're talking about. Look at their R&D. Look at the amount of money they reinvest into developing those businesses as well. So they don't accumulate cash, they reinvest it. Look at the Amazon story. Look how he expanded exponentially in that, continuously reinvesting. So I think I'm sorry I missed Tesla. I really, really am sorry. It was just one of these things that just bypassed me.
Let's
miss Bitcoin.
Jonathan Hertz. Is Tesla too expensive to buy today? Have we missed the boat?
Yeah, for me, Tesla, I wish I'd bought it because it's, gone up 1,000 times. But I will say this, the type of execution that's going to be needed to justify the current share price of Tesla will have to be beyond perfect. His opposition are going to have to be asleep for another few years. No one, none of these big players, BMW, Mercedes-Benz, none of them are going to build a competitive product. He's going to be ahead of all of them forever, and then perhaps the share price is justified. For me, there is too much execution risk in that business to justify an 1,100-year earnings multiple, which is what we're currently paying.
Guys, hold on. Please can I say something? It's taking 1,100 earnings multiple. The company hasn't started to earn yet. The company hasn't started to execute on its strategy yet. So you're looking at the earnings and you're saying 1,100 earnings, the company hasn't started earning yet. The company's going to start growing exponentially. And you look at Tesla and you think, wow, this is a vehicle play. It's not a vehicle play. It's an alternative energy play, which starts off in a vehicle. They're developing battery technology that will make your phone battery last for years. One battery, one charge will last, your phone battery will last for years. You haven't factored that in. So you can't look at this as a car company, and you can't look at the earnings and say, oh, the earnings. If you would have looked at Facebook in the beginning, the Facebook's earnings were 10 million times, the price would have bbeen 10 million times earnings. But you have to give it time to get into its own and execute onto its strategy and let the earnings go.
So, Ron, I want to stop this discussion here because there's so many people posting already about the issue of Bitcoin. So we're going to hear from Warren Buffett, and then there's a lot that people want to talk to you and to Mello about Bitcoin, and I think that's going to be really where some of the fireworks are going to be this evening. So, Danny, play us the Bitcoin Warren Buffett video, please.
What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. I bought a farm in the 1980s, and every year look at how much it produced, the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business. But if you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else, and they come to an end. I mean, those.
So, that's a greater fool theory. That's what you're saying.
Well, yeah, it's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow, and it's wonderful because it does create a rising price. Does create more buyers, and people think I've got to get in on this, and it's better if they don't understand it. That's the other thing about non-productive. If you don't understand it, you get much more excited than if you understand it. I mean, if you buy a bond that says she's going to pay you 4% a year, you're not going to get any pleasant surprises. She's going to pay you 4% a year. But if you can have anything you want to imagine. If you just look at something and say that's magic, you can do it with shark's teeth or seashells or anything, and they did it with tulips in the 17th century in Amsterdam, and they'll do it again. I mean, people, they like to speculate. They like to gamble. And
so, Ron, what does Warren Buffett not understand?
Well, clearly he doesn't understand Bitcoin. And to be honest, I mean, look, with all respect to Warren Buffett, I think what he's done, I don't know if many or any other investors have managed to do, but he's missed out on 80 or 90% of the technology wave. So Warren Buffett didn't make his money in technology. He made his money in many industrial things. And he admittedly missed out on most of the tech wave. His thesis on Bitcoin is completely wrong. And I don't even know where to begin to tell him. He simply doesn't understand the asset. In 2017, he may have been right. Bitcoin didn't give you yield. Today, you can get yield on Bitcoin up to 11% a year, almost guaranteed. So, that argument is very much a 2017 argument. I don't think he understands the asset. I don't think he understands tech very well. And I think he's admitted it on multiple interviews.
So what's the Bitcoin tonight? Are we heading to an all-time high at the moment?
We actually are. The Bitcoin now is $57,000. I think the high is $58,000. So we're very, very, very close to the high. And the truth is that we actually haven't even started yet. We haven't even started yet. And I'll explain to you why. you need to look at the money supply chart, the US money supply chart. And I don't know if I want to actually show you something. And I hope, I can't really share my screen, but I hope I can show this to you guys and you can see this chart. Can you guys see that chart?
Yep.
Okay, you see that spike where the money supply goes up? Okay, that's a chart of the money supply since 1990. And what you can see is that in the last 2 years or so, more money, US dollars, have been printed in the world than in the last 300 years. And what that means is that the dollar has lost value, that the currency, the dollar, has lost value. And if you're holding dollars, then unfortunately your money is devaluing really, really fast. And the problem is that the US is now addicted to stimulus. There's no way that this economy can recover. And so the only way that they can make the markets recover, not the economy, the markets recover, is by printing more money. And as they print more money, create money out of thin air, it means that the money that you have devalues. So this is going to happen really fast. So you need to hold a money that doesn't devalue, a money that is in fixed supply. And then you've got several options. And the one thing that investors had run to for many years was gold, because gold is not a fixed supply, but a short supply or a constrained supply. And the problem with gold is, even though it is a limited supply asset, it's a non-practical limited supply asset because you have to store it with security in big places. You can't really break gold into small pieces to send people small bits of gold. To send gold is a big mission. Bitcoin is like a digital gold. And you know exactly how many Bitcoin there are and how many Bitcoin there will be in circulation. So to summarize it, Bitcoin is a disruptor to gold. And today investors are realizing more and more that they need to if they want to protect themselves against a devaluing dollar and a devaluing any other currency, and in fact, de-risk themselves from government actions around money, then what the entry point is or what the safest asset is Bitcoin. We've seen Bitcoin grow from nothing, from in 2017, a market capitalization of $13 billion to today, $1 trillion, which means that Bitcoin is now on 1/10 of gold's total market cap, and that's accelerating quickly.
So I know Benji has a lot of questions that he's going to quiz our panel with. Just before he does that, I just want to pose one question to Tumelo, because you said something very interesting. You said, we're accepting payments already. You're not just trading in Bitcoin, but you're being paid and you're paying other people. You're actually genuinely using it as a currency, which is not something we often hear. We often hear about people buying, holding, selling, buying again, trading in the currency, but not actually using it as a means of payment. Tumelo, tell us a little about how you're actually using the product.
Yeah, look, I mean, as you said it yourself, look, I mean, being in the space, we all kind of in the space prefer to pay each other in Bitcoin. So let's say consulting services with clients, going to conferences, building stuff, we prefer and accept. I've been preferring and accepting Bitcoin as a form of payment, and the last 5 years more than ever, right? To accumulate the asset, to earn more as you would with money. Just coming back to Rand's point, Rand, that graph you showed us, you have to, firstly, I disagree with one thing that you said, that Tesla hasn't seen earnings yet. They are. Rand, as you remember, they did just buy $1.5 billion of BTC. So coming, of Bitcoin, sorry. Some of us don't know what BTC is, Bitcoin. So, and coming back on that point, the dollar depreciates by 15% every year, right? Why did Elon Musk do that? Why did Grayscale? Why did Michael Saylor? Why is everybody, institutional investors, why did Mike Novogratz 5 years ago, why did he convert 1% of his and even more of his digital asset, of his net worth into Bitcoin? Because the dollar is depreciating. And let's say when you're dealing with money at those, the most extreme of extremities, those are the kind of problems you have, right? It's almost, I'm sorry to say it. I mean, you go and look at these documentaries about the Mexican drug cartels, and the kind of problems they have is rats eating their money. And this is like rats eating billions of dollars. So the same thing is happening to money. And like, I mean, the US government just printed 40% of the total supply of dollars. And, you know, this is just like 2008 happening again, and you're just being swept, you're just having the rug swept under your feet. I also kind of I'd love to hear what the rest of the investors say. You guys are aware of the Bilderberg group, right? Sorry, the Bilderberg meeting, right? The Bilderberg meeting, which is the annual conference established in 1954. I'm just reading this from Wikipedia. And essentially what the Bilderberg meeting is these are the world's most powerful people, Warren Buffett included, who essentially own a percentage of the United States Reserve Bank, and which is a private company. And they basically decide the rest of the world what's going to happen. So they decide on the afternoon, hey, let's go and print 40% of the world's, well, not even the world, but the dollar, and that's like the world's currency. How is that supposed to, you know, you actively directly depreciating the value of it, you know, the dollar itself? Why not, like Bitcoin, you have a finite number of coins, and all that happens is it appreciates, right? So coming back to Warren Buffett's point, we've just had like 40% of like all these bunnies now. Like there's like 40% of all these bunnies that you're saying, and what are we going to do with them? And coming back to that, yeah, how you know, yes, you know, besides just Bitcoin, there are other currencies, and you know, people are being choosing to be paid in those as well. There are also things called stable currencies, which are pegged on a currency like the dollar. And now there's also other cryptocurrencies like Tether and all these other who are actually now benefiting of depreciating the dollar as well, right? So even just holding in the depreciation of the dollar fluctuating up and down, you're benefiting from it. So yeah, coming back to that, it's just, I think with the blockchain, there's a lot more truth and transparency to where the world needs to go, and to cover, or to kind of correct the problems that we have caused for ourselves going forward. And coming back, the Bilderberg group is the worst thing, because it's the highest form of concentrated centralization. And that's why the world has the problems that it has.
So Benji, quiz our other panelists about their views on crypto.
So I think I'll start with David. David, unmute yourself and let's hear your view.
I'm agnostic. I've got no strong views. The only thing is that, you know, the one thing
come on, David. You love Arsenal. You used to taking pain.
What Rand said. Look, I'm not going to get involved in an argument about Bitcoin. You know, it's like arguing with a rabbi or arguing with a priest. You know, they've got their arguments. You're never going to win, or a gold bull. Throughout my life on the stock market as well, whenever I met a gold bull, I just withdrew. I said, listen, you know, I'm not, because everything is well, you know, and look what Rand says is there's a certain amount of truth, but the only thing I want to say is, you know, Warren Buffett is now worth $100 billion. I mean, he did do something right, you know, and I think there are quite a few people who are watching this who would love to have that kind of wealth. I mean, after all, that's what this whole program's about. But I also want to just address something on this money supply. Just understand where we are at the moment. This is not a financial crisis that we're in. And that's particularly to Melo. This is not a financial crisis. This is a crisis that is being brought about by a pandemic, by the governments around the world being forced to shut down the global economy. I heard an economist the other day who described it beautifully. He says it's the same as in France. In August, everything just shuts down, but they build that into the system. So understand, we've got to get our way out of this. We've got to get, and governments are forced to get their way out of this in order to restore people's businesses, to restore jobs. We've got to, first of all, get our way out of this. And then secondly, we have to then rebuild economies so we can get those people who haven't got jobs, all the hospitality sector, and all those sectors have been hurt. And all those sectors who have been hurt, we've got to get them back to operating. So I'm saying, understand that before we start to criticize the money supply. And it's very important. And I love Janet Yellen. And, you know, Janet Yellen described it so beautifully as well. Her father was a doctor. Don't shake your head, Camilla. Janet Yellen's father was a doctor. And she used to say, you know, when he was treating people during the bad times of slumps and that, there were certain people in Brooklyn who couldn't pay. You know, they couldn't pay for the services. It didn't mean he couldn't treat them. So we're in that situation where he was giving he was giving his services for free and not accepting payment. I think this is the kind of position we find ourselves in now. So that money supply, yes, we know the problems. We know it's happening. And one will get on top of it somewhere down the line. The other side of it is if we didn't do this, we would not be having the seminar tonight. We would be in the most awful situation. So give them credit, give the central banks credit for trying to get us out of this. This wasn't imposed by them. This wasn't imposed by financial conditions. This is a bug, a virus that is killing off people dramatically. So I just want to just get on top of that. From a Bitcoin point of view, it's a store of value, and Rand actually said it. He said it's. He didn't say it was an investment. He said it's a store of value, literally challenging gold, as a disruptor as well. And Buffett always said about gold, he says you dig it out of the ground and then you process it, and then you go and dig another hole and bury it and pay people to watch over it. So I think he's trying to make the same example of Bitcoin. So I'm neither here nor there. It doesn't fit in with where I am at the moment. It doesn't fit in with the way that I run people's businesses. I'm very much in the same camp as Buffett in terms of looking for businesses, although I did buy tech, and I've been in tech for the last, 7, 8, 10 years or so, etc. I haven't got a farm. So
sorry, can I just
let the argument continue?
Yeah. Can I just jump in there?
We'll come to you now. We'll come now. Just interesting, Berkshire Hathaway, I think their biggest holding is Apple. It's just, I think, one of their biggest holdings. Paul, as a shareholder of Tesla, firstly, maybe let me ask you, are you a Bitcoin bull or bear?
I would say I'm a Bitcoin non-believer.
Non-believer. So does it affect you that Musk has taken such a big bet on some of their spare cash to put it in Bitcoin, and that he's been so open about accepting Bitcoin as currency for their cars? How do you feel about that?
Not particularly. It doesn't look like one of his better decisions, in my view. He's taken a small part of the company's cash reserves and put it into that. I mean, it's $1.5 billion, a lot of money. And ironically, since he's done that, the Tesla share price has gone down, not up, even though on paper he's making money on that particular stake. But to come back to the broader thing, I'm, again, with David, I think, and with Warren Buffett, no income. I know there are people that say you can make an income if you've got long holdings in cryptocurrencies, but really what those are people who are natural holders, who place their holdings up as collateral, which gets used in order to allow other people to speculate on Bitcoin without actually owning it. So it's a little bit like giving your money to a money lender and earning 20% per annum, which is all very well as long as the underlying asset's going up, but it's going to end in one almighty crash if it starts to go down. And we've seen that with that industry too. So no income, a sideshow market that is trafficked by big holders. I must say, to me, it also falls within the category of no thanks. I'll stick to ordinary equity holdings, and I'll take my chances with their future profits and their dividends.
John, anything to add to that?
No, I do like blockchain. I have invested in businesses that are fintech businesses that use the centralized ledger. I like transparency, but the tokens, the coins, I don't know enough about them, and I never like gold for the same reason. I'm not necessarily a lover of them, but I think the underlying technology is gonna play a major role in years to come.
Wow. And this is a question from the audience, and I just asked the question, so I ask for forgiveness if anyone takes offense. It says, interestingly, that the younger guys who are in a bit more of a rush to make the money are Bitcoin bulls. So Tumelo, maybe you and Rand, you can, Tumelo, you want to kick off? kind of answer our panel and maybe that question.
We brought the whole bull here, eh? Like even our company logo. Very interesting. No, look, I really appreciate this chat. Shapiro, your time, geez, to be able to even find myself in the same place as you is, before heaven is an honor. And to have this very disruptive conversation. Yeah, look, I mean, this is very interesting because we have all these different kind of experiences, walks of life coming together, talking, and all sharing, right? So, I mean, yeah, look, everybody's here to defend their fort, and it is what it is. But I kind of, sit in between where Jonathan and in that, look, there's also there's Jonathan from 2017 to 2008, halfway through, about 80% of whatever you wanted to call cryptocurrency and everything, there's a term in crypto called shitcoins. Rand can tell you all about them, right? So essentially 80% of the cryptocurrency industry from 2016 and halfway through 2018 was just rubbish, right? Absolutely, right? But also, let's say if we look at 5,000 years ago, where money was, where was money, right? And what are we doing with money? And it's not just, let's say, what Shapiro and Paul are saying in that, go for it. Like, sit back in your comfortable chair in your big, high, tall-rise offices and make your money. That's what you've been doing. But the world has changed. We live in a very different world now. We live in an online world. Shapiro, when I was in 2005, 2006, I was in grade 11 and 12. I remember going to the computer room because we couldn't access the share prices live, right? So I actually spent all my breaks after school time and even at the boarding house in the computer room reading the market, right? But now I just do it on my phone, right? Now I can control all this money, all these things on my phone. At my discretion, where and when, whatever, like, I mean, even in Rand's show, Rand, if I was to try and send $1 billion through the bank, over the weekend, it's not going to happen, right? And how much is it going to be? If, let's say tomorrow, it's not going to happen. There's no way how many checks and balances am I going to have with my money, right? And at the same time, sending that out, you're going to give me the biggest transaction fees and all those things. And then at the same time, you're going to give it to, who knows it? Who the hell knows? I mean, what, the Father Christmas and the Tooth Fairy, because that's really who runs big money, right? We don't know where it's going, what's happening with it. The same, big investment companies are funding, cartels. They're funding anything that's worth money. That's what's called private equity, right? That's the world of private equity, high risk investment. So coming back to it, I'd rather stay where the truth is. Shapiro, and coming back to that, look, how old is Warren Buffett? How old are you? Right? Buffett has also had to be as old as he is and being he's had to be around long enough to see there's money being made. And Warren Buffett only became a billionaire at 60, right? So I don't know, you're also going to only see your money at that age. But whereas we are building the future, we're building the future of money. We are in control of it. This is our opportunity. And let's say Buffett's like 90 now, right? So, and how much more time will he be around with us? I mean, there's a lot to learn from him. We can't take that away, but I just believe that we all just at different, different areas, right? Shapiro, for you, let's say for a lot of the things that you've done and the success you've acquired, it's been under a regulated environment, right? With banks and, and there's a lot of trust, but also let's be honest, dude, how old is that environment? The New York Stock Exchange dates back to the 1800s, right? That's as old as stock exchanges are. Bitcoin is only since 2010, but look at how much it's been so disruptive. Look at how many things it's done positively. Look at how much it's changed the world. And by the way, Shapiro, the world was actually in cahoots since 2008, not because of COVID. Corruption, bribery, fraud, all of that, that's been around since the Bible, right? So that's as long as money's been around. And that was just 2000, that was like that was like 3,000 years after money started being used, right? So coming back to that is just going forward, this is not the way that things are going forward. You go look at the rest of the world. Why is the United States, the biggest thing that's happened, why is the United States themselves, why has the Security Exchange Commission allowed banks to be able to process transactions through the blockchain? Because they themselves, they can't even trust themselves. They trust the blockchain, they trust the technology, right? Because at the same time, how many times have we burnt our fingers trusting monetary system? I mean, you know, how many times have we trusted banks with our money? And we look at the things that they do with our money. So yeah, coming back to that is just, I do have some stocks, but I'm not looking at them. I'm focusing on the crypto.
That's fascinating, Ron. I know you wanted to answer. You got anything more to add to that?
Yeah, I mean, I'm gonna ask a question. I'd love to get a response. I know we are a little bit tight on time, but I want to ask Dave a question and say, look, Dave, I agree with you that the governments, the Fed, the governments acted actually very well. They did exactly what they needed to do to restore the economy, and I don't think they had many other tools that they could do it. The only thing I don't understand is, how do you fix this? So the economy starts working again in 2 or 3 years. We start getting to where we need to be. And then you've got all this extra money in circulation. And that means that if you had money before, your money's been diluted because there's all this extra money in circulation unless you can ramp up your money. So what I struggle to understand, and unfortunately I haven't had anybody being able to answer this question for me, is how do they fix this? Because if there's no plan to fix it, then I need a hedge. I need to put my money somewhere else quickly before everybody else realizes what's going on. I'd love to hear. Yeah, I'd love to hear how to fix it.
Brian, just one more thing. Tesla's made $1 billion since that Bitcoin investment. So
yeah, but they haven't actually made $1 billion. I mean, and let's be clear, they've speculated, and you can't say that that's earnings because it's not from the operation. But Dave, I'd really love to understand, like, how do they get back to normal after doing what they've done? Rebase the currency, devalue the whole currency, like Argentina did, like Zim did?
Yeah.
What do we do?
Well, as Tamela said, I'm 73, so I won't be around when we have to sort it. Unfortunately, you're going to be around, and Tamela's going to be around when they sort it. So it will bypass me, but it is an issue. And the only way you can sort it out is by growth, by serious growth. And
growth that does this.
Growing an economy. Yeah, you're going to... I'm not going to question what you're saying about Bitcoin and as a store of value. I'm not going to question that there might be somewhere else that you can put your money in as a store of value. Buffett's view is in land that produces goods. You know, I think.
One sec, please. So I hear you. If you have money in US dollars, and I trust that someone like you has a lot of money in US dollars, aren't you panicking about it?
My money's not in US dollars. My money is in good companies and diversified around the world. I don't have any money in South Africa. All my money is in businesses outside. And the reason is just they're better quality businesses out there. But Rand, what is, during the 60s, we had a very stable era where there wasn't inflation. And we got to the late 60s and 70s where we were experiencing inflation at the pace of like 12% per annum. And the sad thing is that what you're saying now, and correctly, and I'm agreeing with you, is that inflation wiped out a whole generation of savers. And there are so many people who never put their money into some asset or into some store of value, which in my case, and this is where I'm saying this is me, I like to go into productive companies that I think will produce sustainable earnings. So I'm not going to argue with you. I'm saying that's my choice, is to go into businesses which I look, and I'm pretty much in line with where Paul is, his whole thinking as well. Because if you don't do it, and I hope there are people listening out there, who understand this, you have to manage your savings. You have to take care of it. And I'm sure you might have learned a lot today, but you've got to do that. Do not sit with cash, because correctly, when we start to unwind this thing, there is going to be inflation. And that's why markets are so super sensitive at the moment about the word inflation. because somewhere, I know we hope it comes, but we hope that when it does come, we can control it. But if not, it's best to have your, it's best to have your assets in some kind of thing which can hedge against, what could be superinflation.
Can I ask you a question? Sorry, from my understanding. So you, like many other investors, are taking these US dollars because you don't want to be in US dollars, and you're putting them into stocks or companies. And so everybody's doing it. And so you're repricing the companies. You're repricing the companies. You look at the US markets, even though today the economy is probably the worst it's ever been in the last, I don't know, I've only been around for 40 something years, but let's say it's the worst since I've been around. So, and the stock markets are at the highest that they've ever been, right? So what you're saying is that people are taking this paper money and they're putting it into companies and they're repricing companies, and they are hoping that one day the earnings of these companies, which are now broken because the economies are at a standstill, will catch up to these extremely high valuations.
No, you're wrong. You're wrong. We're going into the most exciting period that we have seen since 1995 to 2005, which was where we went into economies where tech helped increase productivity. We're going into the kind of technology that we're seeing now, the kind of the Tesla type technology, the technology that we're seeing in medicine, the technology we're seeing 5G. Those kind of technologies are going to change the whole way that we live, the whole way that we actually conduct our lives. We know it and we've seen it. What's happened with COVID is it's fast-tracked it. So you're going to get incredible businesses. I think also where you've got to deflect your thoughts as well, and this is something we haven't discussed, you've got to take a closer look at China as well. You've got to look at the way that business, and they, believe me, they're going to be the first nation that does have a currency, an e-currency. It might be controlled by the government.
So Ron and Dave, I wish you had started this fight 2 hours ago. But we've just gone 10 o'clock, and they say that only prophets and fools predict the future. I don't think we have any prophets on our panel this evening, but in our last remaining minute, I'm going to ask people for some predictions. So, Ron Neuner, in 5 years' time, what's the price of Bitcoin?
$1 million plus.
$1 million plus. Dave Shapiro, at the end of 2021.
Is this being recorded? Sorry, is this being recorded?
Of course it's being recorded.
I'm so happy because in 5 years' time, I'm going to play David's laugh back to him. I'm going to meet you for lunch somewhere and I'm going to play this laugh back to you.
You might have to get me at Sandringham Gardens, but anyway.
Never, David.
Yeah, Ron will be paying for your lunch with Bitcoin. Dave Shapiro,
I'm not selling.
Give us your prediction. End of 2021, what's the rand to the dollar rate?
2021, this one today?
Yeah, this year, end of this year. Where's the rand dollar going to be?
Yeah, that's only fools predict currency, but I reckon it'll be in there 16.50.
Okay.
I think the dollar's going to come back.
Paul Theron, end of 2022. What does the Johannesburg Stock Exchange look like in comparison to now?
I think it might be gently higher than it is now, because I think we will see somewhat of an economic recovery. So let's say 70,000 points.
Okay, Jonathan Hertz, what does the world economy look like over the next 18 months?
We're going to see a track back in markets. So markets are going to be lower. That's for sure, I think. And I think that, funny enough, I'm a Rand bull. I think the Rand will be stronger in 18 months' time.
Okay. Tamila Ramaphosa, at what age will you be retiring based on your Bitcoin holdings or your cryptocurrency holdings?
What are you talking about? He's retired already, Howie.
I've still got a lot of work to do to retire. Well, look, Buffett's he's 90, he hasn't retired, right? He doesn't take a day off. I think,
but okay, give us a prediction. You mentioned Ethereum earlier. You've mentioned Bitcoin. There are other coins. You referred to some of them as shit coins. Which is the one coin that you believe that over, say, the next 2 years will appreciate the most?
I think definitely it will be Bitcoin. I'm seeing anything between $500,000 to $1 million in the next 2 to 5 years. And as there's less coins, there's more demand for them, right? Because there is a finite number to 21 million coins, and the value is just going to go up and it's going to appreciate while the JSE dissolves like a milkshake.
Benji Porter, has this convinced you to, in fact, go out and buy some crypto?
I was thinking when I go to my office tomorrow, I'm going to hug my desk. I'm going to hug, I'm going to be so happy to be in an operational business that I can sell my policies and that I can make money that way. But Howie, I found it absolutely fascinating. I think when we envisaged this evening, I don't think we could have envisaged far better people. I mean, David.
Except there's 6 of them.
Yeah. I'm sorry.
I'm including you.
But David, Ryan, you think that David would take any pain in this? He's supported Arsenal his whole life. It's this is nothing compared to supporting Arsenal.
I've seen bigger naysayers do U-turns. I saw Jamie Dimon call Bitcoin a fraud, and today all I see is his bank trying to find better ways to introduce services. We've seen millions of naysayers in 2017, and those naysayers have now become the biggest supporters and the biggest buyers today. And I actually think that, when I go visit Dave in 5 years, what he said at Sandringham Gardens, I don't believe it, but when I do,
I've seen him run. It's not. Please, God,
it's not happening. It's not happening. It's not happening. But when I do see him in 5 years, I actually think not only will Bitcoin be at $1 million, but he will also own Bitcoin.
Well, Ron, when you sold the Creative Council,
I love that, Ron.
When you sold the Creative Council, you promised to take me on a yacht on the Mediterranean. That didn't happen. When Bitcoin reaches $1 million, I expect you to buy me a yacht on the Mediterranean.
If the lockdowns are over, how we can finally go on our trip.
Well, exactly a year ago this week, Tumelo said, let's go to the farm and spend a weekend on the farm and eat too much meat. And that never happened because of lockdown. So as soon as that's over, I'm first cashing in on that offer before we come and pick up yours.
The reason he invited you was because he knew the lockdowns were coming. So he knew that he could invite you. And it would never happen.
Ran, you still owe me an invite from 2018 that you never honored. You left me with Charles Hoskinson, all these guys, but thanks for your help for the conference.
I must say, if you've seen me turning my head to the right, if you've seen like this, I've been just watching the markets, and I think the best news of tonight is that we're at certainly Wall Street's going to close at further all-time highs. Yeah. So
of course they printed $1.9 trillion yesterday. Where are they going to go?
You're right. The market's a fiction, but Bitcoin's a fact.
Yes.
But there's a good news story. GSK.
Money printer.
So Shapiro, I just want to ask something.
Season 2. There's a season 2, maybe.
I don't know. They were so staid in the beginning, and all of a sudden at 10 o'clock, they come to laugh. What's wrong with these people?
This is when the price is going up. The markets are up. The markets are up. The United States is up. Asia's about to wake up. The price is going.
Yeah, Glaxo. I think it's Glaxo together with a company called Via Technology or Via Bio. It's a biotech company which is up 37%. Just announced today they've another treatment for COVID. With 85% effectiveness. This is for people who are who are under pressure. I haven't seen the full news as well, but at least one other movement in the right direction in terms of science. Coming to our rescue. So I can't see it now. I'm trying to see the story to my right. But the S&P up 1.2%. So great day tomorrow for us.
You know what this reminds me of? You may all remember back in the year, I think it was 2000, there was a South African company about to list on NASDAQ called African, and they had cameras up at all of the game reserves, and they convinced people on the NASDAQ that when the animals came to drink, the share prices would go up. I think we're seeing similar games being played this evening. And with that, ladies and gentlemen, thank you all so much for joining us this evening. It's been such a privilege to share the stage tonight with some of the most amazing thinkers in old technology, new technology, in stock exchanges, in stock picking, of investing inside the country, investing outside the country. Please leave us a message in the comment section. We'd love to hear from you. Thank you for staying with us for over 2 hours this evening. We will see you on Saturday evening when we talk to the talking heads about Israel's election. There are third, fourth election in 2 years that we're doing on Saturday night, and on Sunday night, we're telling that remarkable story of Isaac Ochberg on the 100th anniversary of his rescue mission to bring orphans from Eastern Europe to South Africa. If not, they and their 4,000 descendants would not exist today. I want to thank you all for joining us this evening. I want to thank Danny Kadar very much for being on control this evening. Really, please leave us a message. We'll see you on the weekend. Thank you for joining us. Good night, everyone. Continue the battle.
Howie, while everyone goes, I want to tell you about Paul's run that he does through the streets of the Growler. Paul, tell Howie, you'll love that.
That's a once-a-year event that happens on the first Sunday of December. And we just run from Upper Harton, opposite the entrance to King Edward School, over about a 23-kilometer route. And it's a fundraiser for the Bethany Home in Bertram's, which we also visit on the run. But it's a good opportunity if you haven't been downtown for a while. Strength in numbers. All you need is a pair of shoes. You won't get mugged because you'll be surrounded by other runners. So that's a fun thing to do, yeah.
Paul, I'm worried the other runners will mug me.
I don't know. What's your average speed? Minutes per kilometer, Howie?
You know something? Yeah,
no, because he does it in his car.
Exactly.
Look, John. I proved my athletics ability in January when I chased after the muggers who grabbed my cell phone. And that first half a meter before I crashed into the pavement was one of the fastest half a meters ever seen.
He went to a hospital. He had to have stitches. He fell. The speed and pace that he was at was enormous.
Thank goodness Jonathan Hertz's wife is my doctor, and she has mended me back to a far better version than I ever was before.
Very good, guys.
Good night, everyone. Thank you for joining us. Appreciate it.
Cheers.
Ciao.
Thanks very much, guys. Cheers.